Okay, so this is asking you to do a horizontal analysis on this balance sheet. And so what it's asking you to do is in this column, this first one, calculate the amount of change and then the percentage change. So this is just kind of like a 1 year trend analysis, you can say. Like what was the change from 23 to 24 and what percentage change? So this should be easy to accomplish with two formulas. Okay, it shouldn't be that hard. Um, Essentially, the percentage change is using 2023 as the base year. Okay, so we kind of did this somewhat, um, and the dollar amount, of course, is just 24 minus 2023. Okay, so try to do this yourself. Literally, it should take you a minute or two because you can just do one formula and just apply it downwards all the way. Okay. And one little trick I guess I'll show you is you can copy and paste formulas. So if I did, for example, this minus this, I could copy this formula with Control C, and then I could paste it in this one here. And you can see here that it just, Excel is smart enough to just apply the same uh, relational referencing. Okay. So I would use that copy and pasting of formula too. Okay, so hopefully everyone, I kind of gave you the formula for the calculating the change, which again is just 24 minus 23. And then the percentage change is just the change divided by the base year, which is 2023. Okay, so you can see there's a $6,000 increase, which is the same as a 5% increase. And so now all I have to do is again highlight these two cells, hold shift, and then Control D. And then I can copy these two cells, paste them here, do the same thing here, Control D. Okay. It literally took, again, if you have some basic knowledge of Excel formulas, it's done now. Okay, so now we can do a little analysis. Okay, we can see what the big dollar changes were and the big percentage changes. Okay, so for example, this 66% increase in bonds payable. Okay, this is standing out to me because not only is it a big percentage increase, it's also a big dollar increase. And you can see here that we issued a lot more bonds. Okay, so this could be something that I'm going to have to, check on. Okay, why is my business getting more levered? Is it, uh, we've raised all this new capital? Is that a good thing or a bad thing? Where is that money gone? So I'm going to now be clued in that some big changes happened that I should now pay attention to. Okay, what else do I see here? Well, I can see that my current liabilities went down a lot. Okay, so there's something going on here. Maybe this and this are related. Okay, maybe we paid off these accrued liabilities. We would need to know what this is, right? Maybe this bond issuance is related to this payoff. Okay, so what this analysis is trying to do is to highlight the important things for you to focus your analysis on. And it's going to be, if it's a big percentage and a big dollar amount change, that's definitely something you need to investigate. Sometimes there will be things that are like big percentage changes, but there's such small dollar amounts that it doesn't matter, right? If let's say you had like salaries payable went from $1 to $10, okay? As a percentage change, it's a big percentage change. It's like a 9x increase, but $10 is not material to this balance sheet. So it could be in some cases where the percentage is misleading. It's saying, oh, there's some big thing that happened, but if you look at the dollar amounts involved, it's not really, it's something trivial. It's because the base year is like so small that can skew the percentage change, right? As we saw, the base year is very important in this kind of analysis. And changing the base here can change the analysis significantly. So yeah, so this is, in a nutshell, this is another, this is a kind of yellow flag here. You can see that accounts receivable has gone up more than total assets. So this is kind of a yellow flag. I'd want to know what happened to my accounts receivable. Why is it growing so much more than my total assets? Okay, so again, I'm just trying to illustrate why this type of analysis is useful. It helps you hone in on important things happening. Okay. All right. So now let's do the vertical analysis. Okay. So um, what we're going to do is use net sales revenue as the basis. Okay. Now we're going to go up and down, but this is going to be the basis of our. It's going to be the denominator in the proportion. Okay. So see again, if you can find the Excel formula. Again, it's one formula to do the whole thing. It should take you less than a minute to do this. Okay, so hopefully you're able to use what we've been doing in the formulas, in the format of the formulas, to realize that you could just do the cell divided by your basis. And the basis, again, you have to put the dollar signs to fix that. Okay, so in this first case, it's just C8 divided by C8, but the denominator, it now has these dollar signs. Okay, so this formula is 100%, which is, since we're using net sales as the basis, it makes sense that this first line is going to be 100%. Now we can just apply the formula down. Okay, and you can now see that the top number, since it did not have the dollar signs, moved down, but the denominator stayed fixed on net sales. Okay, so this analysis is really useful because we've already calculated a lot of the margins. This is your gross profit margin. This is your kind of operating margin. This is your net income margin. Okay, so you can kind of see out of every $100 of revenue that you generate, $22.48 you're keeping as profit, and you can just see all the other like steps in that process, right? And you can see kind of where all the money is going. Okay, you can see that for every $100, $55.41 is cost of goods sold. $16 is operating expenses. 54 cents is interest expense. $5.50 is tax expense. And then if you take all that together, that leaves you with $22.48. So this vertical analysis is very useful for looking at margins, okay? And seeing also like your operating expenses, right? It's 16% this year. Maybe you look at last year and you compare what percentage was operating expenses last year and the year before that, and you can see what the trend is. Okay, you would hope that it's proportionally the same as revenue, because of course your revenue is changing every year too, right? Maybe your revenue has gone up a lot, and in order to see if your margins are getting better, if your net sales revenue has gone up 100%, and your operating expenses have also gone up 100%, let's just put numbers to this: 200, 100. You can see that the revenue doubled. If your expenses doubled, your profit is going to double. So you would hope that if your revenues double, your expenses will not double, right? But you can see here that in this case, if you did your vertical analysis, they're going to be exactly the same for both years. Okay, so though your business has changed, it's doubled everything, the vertical analysis has not changed because your margins have not changed. Okay, so, but again, like let's say again, this stayed the same. You can see that your expenses were 25%, now they're only 13%. So the fact that you would compare your two vertical analyses, so this is what I was saying, you can combine vertical and horizontal analysis, and that's actually maybe the most useful. I think the easy part is doing the calculation. It's the interpretation and what it means that is the important thing, and that is gonna, take a lot of time and expertise on your part to understand. You'll have to know the industry, you have to know the company, you have to know a lot of details to really truly explain what's happening. But the first point, of course, is to just calculate the numbers, and you can get some sense. You may not be able to answer all the questions of why it's happening unless you have that background detail, but at least you'll know that here's some important things that I need to find out about. Okay, you should at least be at that point where you can see the interpret it enough to be like this are important, and I need to know more about that. Okay, and of course the end game is you see what's important and you have some understanding because you know the company, you know the business, etc., the industry, and you can explain things.